Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Tourmaline oil stock so we can determine if it's a buy or a sell. Tourmaline develops and produces oil and gas properties in the Western Canadian Sedimentary Basin. The company is headquartered in Calgary, Alberta, Canada, and was founded in 2008. Let's get started with the model. This is a large cap company, 21 billion market cap. They're trading at $60 a share, and they have 344 million shares outstanding. We're going to look at the ticker that trades on the TSX. So all the numbers in this video are in Canadian dollars. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow growth is amazing. They had a negative in 2019, a small positive in 2020. It jumped way up to 900 million in 2021, and then tripled to 2.7 billion in 2022. Net income is the profit or loss on the income statement. It's revenue minus expenses. That also grows a ton as well, 300 million way up to 4.5 billion. Revenue is the sales for the company, and that goes from 2.1 billion up to 8.7 billion in 2022. Let's look at the capital structure. 13.7 billion of equity and 600 million of debt. So they're 96% equity, 4% debt. And I gave them a WACC of 12.5%, and that's the discount rate we're gonna apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year for, that's 22 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $20 billion. We divide that by 344 million shares. And we get a calculated stock price of $59. They're trading at $60, so they're trading at a 3% premium. It's a sell according to the model. Simply Wall Street values the company at 104. They're saying it's 42% undervalued. 14 analysts priced this stock, and the average price target is 82. So their average target is 36% undervalued. This is where the stock has been trading since they IPO'd back in 2011. It looks like they IPO'd at about $21. After 3.5 years, it jumped up to $60. Then in the first half of 2020, it was below $10. That would have been an amazing time to get it. Of course, who would have known it would have shot up to over 80 bucks. It has come down about 25% since that peak, trading around $60. They've been consistently paying a dividend since 2018. The last time they paid a dividend was in March of 25 cents. Before that, in January, they paid $2. They've been generating so much cash flow that they were able to give back these big dividends. You see, they did a $2 dividend in January, November, $2.25, August, $2. So it's a really interesting dividend structure. They pay a small dividend, then a really big one, then back to a small one. And I base their dividend yield off the 25 cents off their last dividend. That's a yield of 1.65%. 13% of their free cash flow, 8% of their net income. There are 81 companies in the same industry as Tourmaline, and Tourmaline pays a dividend lower than average. I converted all the market caps to Canadian dollars, and they rank 12th. They have a good price to book at 1.5. Their PE is better than the average and median. Their price to free cash flow is better than the average, worse than the median. Same thing with their price to sales, better than the average, worse than the median. To summarize, I have them trading at a 3% premium. I rank their free cash flows, revenue, and ratios 8 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.